Hello everyone, and welcome to another episode of our Financial Services podcast series. I'm your host, Sinchan. Today, we're going to talk about a very exciting topic. We're going to cover digital money and payments. Now, that's a topic that cuts right through innovation, technology, and customer experience. Now, around the world, we are seeing a vital change in how money moves, in how money is created, and how consumers like you and I interact with money. Now, understandably, that's creating lots of opportunities and challenges for financial services firms. Now, to unpack and talk to a lot more about this exciting topic, we have another financial services leader in the firm today. Welcome, Debarshi.
Thanks, Sinchan.
We are here today right after the World Cup final.
Oh, exciting.
So hopefully you're a bit rested as well.
Sleep deprived. I hope our viewers and listeners have really enjoyed the game and not too sleep deprived yet, especially people in Singapore.
Exactly. Well, I'm running on Red Bull and bunches of coffee this morning. So let's see how the next 15 minutes goes on that. Excellent.
We'll stay awake.
We'll try to be. And we try to make this very exciting for our viewers and listeners as well. Okay, so Debarshi, let's start with introduction from you first. And then maybe start with the big picture. What's really changing and happening in the world of digital money and payments?
Perfect. Quick introduction. My name is Debarshi Bandyopadhyay. I lead the consulting for payments and digital assets here in KPMG Singapore. I've been a career banker previous to joining KPMG. I was leading global teams on DLT and client innovation. Before there, I've been here almost 4.5 years in KPMG. Going back to your question, Sinchan, it's a very interesting thing. So what are the key trends? What's happening in the digital money? Just to set the game or set the stage for what's digital money. So we are going to talk about primarily three things here. One is stablecoins, regulated stablecoins. Second is on deposit token or tokenized deposit. Slight difference between the two, but for this conversation, we'll keep it almost the same.
Yep.
And third is CBDCs, retail CBDCs and wholesale CBDCs. So there are three key trends which we are seeing in this particular world of digital money. First is we are seeing how the world of the corporates are actually expecting 24/7 liquidity, 24/7 movement of money, a lot on cross-border, cheap and faster cross-border transactions, instant payments domestically and even in cross-border payments in there. So we are seeing the world is actually moving, or their business models are moving towards higher requirements from these digital money or movement of money to be cheaper, faster and much more secure way of moving the money. This is one of the key things which we are seeing, and this is being actually triggered by tech and the risk and risk governance and innovation that is happening in the three world which we talked about: stablecoins, tokenized deposits, and CBDCs in there. So we are seeing a lot of those ask from our clients, from our corporates, and that's where we are seeing this is being supported by this digital money. Right. Secondly, we are seeing that there is a convergence between payments and tokenized assets, especially of the financial instruments, like money market instruments, like your repo transactions, equity being tokenized. Both of them, previously these were working in a different chains or different systems where movement of collaterals happening at a different system, whereas underlying payments are again happening in a different system. So there was T+1, T+2 settlements. Now what we are seeing is a convergence of this movement of these collaterals and the underlying payments which is coming through and becoming more or less on a similar system or same system, so that you have this something we call atomic settlement, where your collaterals move and your settlements happen at the same time.
So it's T0 almost now.
It's T0 almost now. So basically now the business models are evolving to support this kind of T0 settlements, and how exactly the leverage would work in the T0. What are the instruments that are being supported for the T0 settlement pieces? So that's where we are seeing this convergence between the collateral movement and the payments in there. Thirdly, we are seeing competition, and especially among the banks, fintechs, and a lot of crypto native institutions are coming in there. So initially when you see there was a huge fintech like 10, 15 years back, fintech movement where the fintechs came in and they abstracted the layer between the users and the banks, where they took over all the interaction with the users and the banks were doing the underlying settlement. Now we have moved one step forward. Now they are being challenged even in the settlement layer, which the banks used to first dominate. Now what we are seeing is a lot of these stablecoin companies, a lot of these crypto companies are getting into that settlement or movement of value piece which is coming in there, and they are trying to get a lot of these business out.
So is that creating a SWIFT alternative almost?
Almost there, almost there. I would say that even SWIFT is getting into the DLT ledgers.
Yes,
They're brought in.
Yeah.
So they have seen it's high time that they are going to get disrupted. So they have brought their own solutions in there, and it's high time for them to do it because they have got the full network of banks and doing that. And so they are complementing all these other networks which are coming up. So it's not either SWIFT with DLT or something else. They are actually integrating all the other networks and solutions into their own systems. So it's very complementary solutions which is coming up.
Right.
And this competition is awesome for the consumers, for the corporates, for the retailers, because they are getting the best of that. So these are three trends which we are seeing, and hopefully we see more of these trends coming in the future.
Okay, so great. So it sounds like the way value is created and the way the value is transferred across the global economy is becoming much faster and creating better experiences.
And decentralized.
And decentralized.
And not dominated by just by the banks.
Yeah, absolutely. And just creating new experiences and hopefully better experiences for people like you and I.
Absolutely.
As an example.
Absolutely.
Okay, great. So if we then think about our clients, we deal with a lot of the major financial institutions, the big banks, the big asset managers, the big fintechs as well in there. What are the opportunities coming through for them?
So for all these big corporates, we start with the CFOs and CEOs, and we have gone together and spoke to all these CFOs and the CEOs in there. So there are two ways you have to look into it. Like there are those paytech companies which are trying to double down in these digital money opportunities to up their top line and grow their revenue, grow their market share. So the likes of Visa, MasterCard, PayPal, Stripe, they're all coming with solutions which caters to their clients on how do they collect stable coins. Even they're launching stable coins, they're creating new networks which is complementary to their existing networks. And then they're providing new solutions for their clients to get, send money, receive money in a much cheaper and faster way in there. So that's one set of clients which we are seeing, especially in the paytech world. They are absolutely spending billions of dollars into this. Now, the second set of the clients which we see, and when we go and talk to them, is primarily the corporate clients, the commodity clients, and basically all the other non-paytech clients in there. They are looking into more or less around efficiency gains. So they are trying to work their bottom line and see how they can save cost, how they can manage their supply chains, route, and make payments, cross-border payments faster, cheaper, and more safer way. At the same time, they are also looking intra-company liquidity management, treasury risk management, using these digital money in there. So we see, and a lot of these efficiencies are coming in. They are experimenting. Have they really gone mainstream yet? I wouldn't say so yet. It's at an inflection point, but I haven't seen a volume tremendously growing and saying that, hey, 20%, 30% of all these things are already in digital money yet. But they are spending money. They are putting in a lot of money in it, and it's high time that the corporates also get into this bandwagon and start preparing. Otherwise, they're going to get left behind.
Okay, excellent. So it sounds like there's a lot of exciting stuff happening in the industry. There's a lot of investment flying in.
Great time for digital money.
Exactly, it's a great time for us to be here. I guess final topic, Debarshi, for you, and I ask this to all my guests in the show as well. If you think on your hat as a strategic advisor and think you're advising a C-suite in a large financial institution, what would you recommend as their priorities for the next 12 to 18 months?
Absolutely. So first is don't think digital money as just a technology issue or technology problem or even a technology opportunity. Absolutely, it is a technology opportunity. It is backed by technology innovation. But think more around your business scenarios. What you're going to target towards first. Are you holding excess liquidity which you want to deploy? Is your cross-border payments is a problem? Is your cost related to payments is high and you want to bring it down? Or you want to expand to a market which is not easily accessible using traditional fiat currencies in there? Think about your business scenarios and business cases which you want to solve first. Once you have that, that's where you need to double down on what networks you need to be on, what blockchain solutions you want to be, what infrastructure you want to build in, whom do you want to partner with, because you can't build it on your own, all these things. So the best thing is for you to partner with a good institution, banks who are already doing a lot in this, and it's going to provide you the solutions which suits your needs in there. So once you have your business case, once you have find the right partner, then is the time for you to hyper experiment. You start with a small POC, small pilot solutions in a specific corridors in there. And lastly, and which we have seen and we have told a lot of our clients that see it as a pan corporate or pan institution opportunity, not just do innovations in silos in different departments. Start thinking about compliance, start thinking about the enterprise risk management framework instead of going one at a time. You need to have this in place so that to support your innovation in each of these departments, not an afterthought that you do an innovation and then you think about pan institution enterprise risk management framework. So it's very important that you all start now on thinking about your ERMF and have a policy and have a governance, have your controls in place before you get into it.
Got it. So it sounds like this is a very clear strategic enabler for growth. There needs to be a huge focus on the right investment, the right use cases, and driving the balance between technology, innovation, and consumer focus to make this a success story.
Absolutely. Absolutely.
Great. Very exciting topic. I think we need the part 2 of this one to go deeper into some of the topics as well. I mean, we spent a lot of time talking about AI with Fergal and Jerry in the last episode. That clearly needs a part 2. I think this needs a part 2 as well. So we'll come back more on this topic. But for today, let's put a pin on that. Thank you, Debarshi, for your time.
Thank you, Sinchan.
And look forward to having you in the show in the near future.
Absolutely. Looking forward to it.
Excellent. Thank you all.
Thanks.